Hello to everyone who's just joined us. We're just going to wait one more minute to let a few more people in, and then we're going to get going at that point. Great. Hello, everyone. So there are still people coming in, but we have a lot to cover in the hour, so I think we're going to get going at this point. Welcome, everyone, to today's webinar. This is a gold standard organized webinar with support from the German government. And in this webinar, we're going to be looking at the outcomes of COP27, focusing in particular on what came out of COP27 on Article 6 and on carbon markets more generally, and what are the implications of this for the market as it goes forward. We're really happy to have so many people joining us from across the world for this webinar. And I'm really pleased to have an excellent panel with me today as well to look through some of the issues and to really focus in on what some of the big implications are from the COP decisions. My name's Hugh Salway. I am head of markets at Gold Standard. And with me today, we have Lisa DeMarco, who is senior partner and CEO at Resilient LLP. Jonathan Crook, a global carbon markets policy expert at Carbon Markets Watch. Florian Eickhold, climate finance and carbon market expert from Atmosfair. And Teresa Hartmann, director for voluntary carbon market formation at IETA. So we have some great perspectives here to dig into the developments on carbon markets from the COP. We're going to move on to a panel discussion in about 10 minutes, but before we did so, we just wanted to provide a short summary of what came out of COP in general on Article 6, and then also some of the wider developments, so that we can set the scene before we go into a panel discussion afterwards. And then we'll make sure that there is a lot of time at the end for questions which you in the audience may have. And as we go through, please feel free to ask your questions directly into the chat function. And that's how we'll pick up on questions. So we'll take the questions from the chat function as they come, and we'll answer them at the end of the session. So just starting now with the headlines and the outcomes from COP27. The overall outcomes have been talked about a lot in the media. The COP did end with the adoption of the Sharm el-Sheikh implementation plan. And two of the big headlines on the pro side and the con side, which we've seen some discussion of, are firstly, the establishment for the first time of a new fund for loss and damage in developing countries who are particularly vulnerable to the adverse effects of climate change, which is a big milestone for the COP negotiations overall, and one that hasn't been possible so far in the process. And so that was kind of been really seen on the plus side. More on the negative, I think, is some of the language which maybe made it into the COP decision around low emissions energy alongside renewable energy, and then maybe some of the difficulties which were had in providing security around the 1.5-degree target. So I think what we've seen in general is some pros and some cons being the general perception of the COP itself. Looking at Article 6, decisions were adopted on Article 6.2, 6.4 and 6.8. And with the history of Article 6 negotiations, that's not always guaranteed. So I think it's positive in a way that we had these decisions. But as we'll talk about a little bit later, and as our panel will get onto, a number of topics in those discussions were pushed on to later negotiation rounds rather than being decided in Sharm el-Sheikh itself. And then outside the negotiations, and I'll talk a bit more about this in a second, we saw a lot of activity in the carbon market space. So new initiatives, including the African Carbon Markets Initiative, an energy transition accelerator launched by John Kerry of the US government, and then lots of work around Article 6 capacity building as well. And then other developments as well, such as a new consultation from securities commissions across the world on the role of securities commissions in regulating the voluntary carbon market, bilateral agreements on Article 6, and new funds to invest through the carbon market. So a lot overall which took place. Moving on. We're going to start with Article 6.2, and I think in the text itself there is a lot of detail which is really important for the implementation of Article 6.2 and provides that next level of detail down from what we had in the COP decision last year. So there are important pieces of guidance on some of the more boring and functional stuff for Article 6 implementation, like the accounting and reporting database, technical expert review of information provided by governments, a voluntary forum for registry experts and administrators to gather and to provide kind of information sharing, and then some guidance on national registries as well and how they need to be set up, which was an issue which proved quite thorny in the negotiations. Alongside this, there are some other elements as well. So a request that the Article 6 capacity building programme for governments is sped up and that there's a real focus over the next year on the issues, the topics which are really important for getting things going on Article 6. And then something which I think we're going to come to a little bit more in the panel discussion on confidentiality and a provision which allows parties to keep information confidential on their Article 6 use and their Article 6 cooperative approaches if they describe the basis for this decision. And then I think a key theme which we'll sort of see coming through here is elements which were agreed and then those which weren't. And so there's a number of things which were moved into what's known as the work plan. So issues to be discussed and negotiated at a later stage. And this includes some important questions around when a country provides an Article 6 authorization, can they then change that at a later date? And what are the conditions around that? Are emissions avoidance activities eligible under Article 6.2? How will the international registry work? We had some guidance on that, but there's also some further guidance which we provided in the future. And then some more technical guidance around how countries should actually implement corresponding adjustments and how they should set the right trajectories. So a lot of detail was agreed, but some of the important political decisions left for later stages. Moving on. On Article 6.4, I think there was a pretty similar story. There was guidance which was included in the decision for how activities should transition from this CDM through to the Article 6.4 crediting mechanism. And there was guidance there around how their crediting period will work, how it will work for them to apply a new methodology under Article 6.4. And one of the things which I think is interesting in this is, if you look at the timings, I think there's going to be quite a lot of activity over the course of next year on CDM transition. So the deadline for projects to apply to transition is the end of next year. So there's quite a tight window for projects to start to apply for transition, and then over the few years after that, receive it from host countries. There was also information there about the fees for projects under the Article 6.4 crediting mechanism, so what fees they may face, the rules of procedure for the new supervisory body, and then something which we've got here at the bottom, but I think was one of the more significant elements which came out of the Article 6 text, and we'll get onto it soon, but the concept or a description of units which aren't correspondingly adjusted under Article 6.4 being called mitigation contribution units, and some description about how they can be used. And we'll talk about that with the panel in a few minutes' time. And then again, some elements were moved to the work plan. So whether emissions avoidance activities are eligible under Article 6.4 moved through to the work plan for next year. And then some important decisions about methodologies under Article 6.4. So in general, how existing methodologies can be revised, but then also questions about removals activities, which didn't really feature in the CDM. And so these are things which will be taken forward over the next year as well. Moving on to the next slide. And then there were some kind of other decisions which maybe aren't so relevant for some of those on this call. On Article 6.8, the final element of Article 6, where there was the adoption of a schedule of activities for non-market approaches, which is what Article 6.8 covers, as well as guidance for a new web-based platform, which will allow those who kind of want support and capacity building for non-market approaches to receive it from others. And then a short decision on the clean development mechanism, which provided clarity on what the clean development mechanism can continue to do until Article 6.4 is ready to receive requests for transition. And then also on the flip side from the other decision, how units can be transferred from this, the CDM through to Article 6.4. And I think, and maybe we'll talk about this a little bit with the panel as well in a few minutes. With the COP, I think there's often a focus on what comes out at the end, but sometimes it's interesting to look at what wasn't agreed but was proposed kind of over the course of the 2 weeks. And there were points in the time over the 2 weeks where we had some of these proposals on the table. Some of them may come back in the future, maybe part of the work plan, some of them may not. So there was a proposal that RED Plus results assessed and verified under Article 5, which has kind of been known sometimes as sovereign carbon recently, that these could be recognised under Article 6.2, and this was something which didn't make it through in the end. Decisions around whether authorizations of ITMOs can be changed once they're provided or whether they can't was another one. And then some of the other ones which you can see on this slide were also part of the discussion at some points, but weren't ultimately agreed. And I think you can read these in two ways. It depends on the issue. Sometimes they're ones where maybe there just isn't enough support in the negotiations. And in other cases, it's ones where decisions were just deferred for later points in time. Moving on to the next slide. I think it's really interesting to look at what happened outside of the negotiations as well at this COP. And I think a real step change from this COP versus last year's was that we really started to see some signs of implementation of Article 6 in the margins and outside of the negotiations themselves. So we've collected the different examples of bilateral agreements and partnerships that we saw coming out of the COP, that we may have missed some here. So we saw some examples of MOUs or kind of early signals of a willingness to partner with Singapore and Papua New Guinea, Singapore and Peru, South Korea and Mongolia. We saw formal bilateral agreements amongst a number of countries, including Singapore, Switzerland and Japan on the buy side. And then importantly, we saw the first authorization of ITMOs under Article 6 between Switzerland and Ghana for a project promoting climate-friendly rice cultivation. And this is a really important milestone in the implementation of Article 6. And we hope that it's something which doesn't become a milestone in the future and that this just becomes a regular rhythm of authorizations going forward. We also saw a real sign of cooperation and willingness to work together across governments and other institutions. So in the second week of the COP, the Japanese government organized and launched a new Article 6 implementation partnership, bringing together over 40 countries and over 20 institutions, including Gold Standard, willing to work together to support capacity building on Article 6 implementation. And I think this was a real sign of the scale of interest in using Article 6 and working together to make this work effectively in the future. And then there were some other notable signs as well. So in the second week of the COP, discussions around the potential for China to use Article 6 ITMOs to boost supply for its national emissions trading scheme. And then also a signal from New Zealand that it may become a quite significant buyer of credits of ITMOs out to 2030 as well. So a lot in the margins to signal confidence and use of Article 6 over the next decade. And then on to the next slide. And we're just going to end with this slide here, just to point out some of the other activity which happened outside of the negotiations and outside of Article 6 itself, but sent some signals for the voluntary carbon market and for the use of carbon markets more generally. And there's a number of things that we weren't able to capture here. We've just focused on 4 of the initiatives that we thought stood out. One of those, the top one, is the launch in the first week of COP of a new 90-day consultation from the International Organization of Securities Commissions. So this is securities regulators from across the world who launched a consultation looking at 2 consultations, one looking at the establishment of sound compliance markets, and the other one looking at how regulators within countries can support greater resilience and integrity of the voluntary carbon market. And there's been work which has been going on over the past year looking at this, but I think it showed a real sign of international regulators starting to think through their role in supporting and underpinning the voluntary carbon market, sitting alongside some of the private sector initiatives that we've had. A second important initiative was the African Carbon Markets Initiative, which was launched in the first week of COP. And this was an initiative trying to look at how carbon markets and carbon finance can be scaled up within Africa to support the growth of carbon credit production and issuance, but also to create jobs and other sustainable development benefits within African countries. And there'll be more work which comes forward on this over the next few years. A third initiative which got a lot of attention in the first week of COP was the Energy Transition Accelerator, launched by John Kerry, US Special Envoy, as well as by the Bezos Earth Fund and Rockefeller Foundation. And the aim here was to develop methodologies and to incentivize carbon finance to decommission fossil fuel production and at the same time to support new renewable energy production. And commentary which came around this was a little bit mixed, and I'll be interested to see if our panel has any input on this as well when we get to the panel discussion. And then a final one, which we've included as gold standard, was involved in this, and we do see it as quite a significant development, was the creation on the final day of the COP, or near the end of the COP, of the Ethereum Climate Platform, which is a grouping of companies, institutions, and initiatives in the Web3 space looking to come together to address the historic carbon footprint of activity on Ethereum, the blockchain, which is a pretty sizable past carbon footprint. And so it's a pretty sizable and a pretty ambitious effort, which has been going to be going forward. And Gold Standard is really pleased to be partnering with them to look at how this can be done in a way that signals higher ambition and is done in a responsible way. That was a lot of information to get through in about 15 minutes. And it's hard to capture 2 weeks of negotiations and other activity across the COP in that time. And I tried in there not to provide too much of my own assessment, because what matters here is what our panel thinks of all of this. And so we're really interested to hear from those on the panel. And if you do have questions that you want to ask, please do start to ask them in the chat, and panelists may pick them up as they answer my initial questions, or we may get to them afterwards. Lisa, I'm going to come to you first. So really interested first in your reflections from Resilient NLP, as someone who's very closely involved in the negotiations themselves, and also IETA chair, on some of the key issues which were talked about and discussed in the Article 6 negotiations, and in particular on authorizations. And so there are two issues which I'd be really interested in your views on. The first is the discussion that was had about whether a country can change its authorization at a later date, and just explaining a bit more about why this matters. And then secondly, the concept of a mitigation contribution 6.4 ER, and what we should all think about that.
Thanks, Hugh. The first issue is, if you compare this COP in Sharm el-Sheikh to Glasgow, there's no doubt that the level of outcome, the effective developments, are much more modest in Sharm than they were in Glasgow. And the two elements you pointed out are really quite noteworthy. There were a number of parties led by the like-minded developing countries, predominantly the oil and energy producing nations, but joined by the Africa group, that were really pushing for wholesale ability to revoke. And that's how the language started out. Revoke authorizations once provided. And the term authorization wasn't uniformly understood to be the same thing by all parties. In fact, the EU really highlighted that when we speak of authorizations, we're actually speaking of three things. The first is the agreement between two parties to enter into a cooperative approach. And we would call that an agreement, but some people call it an internal authorization of the countries in question. The second is the authorization of the ITMO itself. And that's really important, Hugh, and that's like our currency. Once we have an ITMO issued, it's like a dollar bill being printed. You don't want parties to have the ability to rip it up, unless, in fact, it's a counterfeit dollar bill. And some parties were arguing quite strenuously, again, LMDC and the Africa Group, that they had full sovereign authority to be able to revoke those ITMOs once issued. And the last element is the authorization of participating non-state actors. And in that regard too, unless there's fraud or some associated contravention of the terms and conditions of the authorization, we really don't want to see those revoked. The final text has bumped that issue, determined as changes to authorizations. We really are talking about revocations there, or the parties that are pushing it are talking about revocations, into a work plan that will be discussed over the next year. And very, very importantly, there are some comments that will be sought from the private sector out to March 15th, 2023. And I would actively encourage all of your members on this call, all of your stakeholders on this call, to really push the points that the private sector will not respond. You will not mobilize the finance and investment that you need to mobilize if in fact authorizations are revocable. There's also a sub-issue as to timing and when they're given, with many entities wanting to wait until the very last minute, until they're used to provide the authorization. And that will be another element discussed in the context of the next year. Really, we want those authorizations, positive or negative, a non-authorization, and we'll get to that with the next issue, to be given as soon as possible, as soon as the project comes to bear and the related authorization for the parties to participate, or at least before issuance should occur. That was part of the text. It got negotiated out in the final element. And you spoke of the issue around the new term, because it's carbon, we need a new acronym, MSERS, Mitigation Contribution, Article 6.4, Emission Reductions, otherwise known as unauthorized emission reductions. And there was a prevailing presumption among the westernized negotiators that because there was a positive list of what constituted an ITMO, nothing would be internationally transferred if it didn't fall within the definition of an ITMO. And the ITMO definition includes authorized Article 6.4 emission reductions. Well, there was no commensurate prohibition from transferring international units in that list. So fairly, LMDC countries and the African group pushed very hard to have free rein to be able to do what they wanted with Article 6.4 unauthorized emission reductions, now known as MSERS, and to do so without oversight or ongoing regulation of the Article 6 supervisory body. This is problematic from a number of perspectives, because you don't have the rigor of the standards of the voluntary market, like gold standard, all the good things you've got in your terms and conditions and rules of use, and you don't have oversight from a body like the supervisory body. And you similarly don't have corresponding adjustments. So we're a little concerned that instead of having two converging markets, the voluntary and the Paris compliance markets, we may have more of two parallel markets. One that looks like an unauthorized emission reduction market, international trade therein without the accounting rigors of corresponding adjustments, and one that is more of a Paris compliance unit market. And we'll want to be sure that that gets resolved in a manner that is conducive to market integrity, transparency, appropriate accounting, and no double counting, all those elements of integrity that you know and have pushed and pursued as the gold standard. So watch that space, and we intend to be very active in that. And I think it dovetails with what the IOSCO consultation is looking to achieve, and you mentioned that in your presentation, also very interesting.
Great, thank you very much, Lisa. Jonathan, we're going to come to you now, Jonathan Crook from Carbon Market Watch, who I think alongside Lisa spent a lot of hours in the negotiations themselves, so was very closely following what was going on and the developments over the 2 weeks. And from the perspective of Carbon Market Watch, it'd be great just to hear in general about your reflections on the outcome. So what you consider to be the most significant for better or for worse, and also some of the things that were deferred for later years and what that means in practice.
Yeah, thanks, Hugh, first of all, for the invitation to be on the panel. Yeah, so we found several elements of the outcome to be sort of lacking. And so namely concerning Article 6.2 first, where I can start. So I think first, when it comes to transparency in 6.2 reporting, so especially around this question of confidentiality and the review process. So in the 6.2 guidance from Glasgow, there's at the end of this chapter that details all the information that parties are meant to report on regarding their cooperative approach, their ITMOs. There's a short paragraph saying that all information will be made public unless it's identified as being confidential. But there wasn't further clarity at the time on what justifications and conditions there might be around this, the types of information this could cover, if it could be everything or not everything. And so there was a mandate for negotiators to come back to discuss this, partially at COP27. So there was sort of an opportunity to bring more clarity around this. But unfortunately, this is not what happened, and we actually kind of see the opposite outcome happen. So the agreed text is quite ambiguous still, keeping the ambiguity from Glasgow, essentially saying that a country may designate information as being confidential, but there's no limits that are imposed on the types of information that this could cover. And so this means that potentially a country could consider that all its information is confidential about its cooperative approaches, about its ITMOs, et cetera, which would then not be made public. And in addition, and you alluded to this, Hugh, but countries don't actually need to justify why they're designating information as being confidential. So there'd been quite some debate on this and back and forth. And at one point, the texts read that countries shall justify why information would be confidential. But in the end, this text ended up being that countries should justify. So now there's a situation where not only could a country, if it wanted to, decide that all information it reports is confidential, so it wouldn't be made public, but it could also do that without providing justification for the reason for that. And so I think, of course, it's in countries' best interest to be transparent about 6.2, in part so that there's trust in the mechanism. But the risk here with the text that's been adopted is that if countries want to be fully secretive, they can. And so this information still will be reviewed, right, by the expert review team, even if it's confidential. But the outcome also kind of stripped this review team of any meaningful authority, I would say. So specifically, the review has to be facilitative, non-intrusive, non-punitive. I think it's also shall not make political judgments. So these things can be interpreted very broadly and limit quite a bit what the actual review team can do. And they're not actually meant to review the underlying cooperative approaches or activities or ITMOs themselves. So overall, this kind of weakens quite a bit the review process. And it means that there might not be potential consequences from the review process if there are recommendations that are flagged. If these are ignored by a party repeatedly, what are the repercussions? These aspects are not very clear here. And again, this is problematic because this is kind of the only sort of real third-party check on Article 6.2 in the sense that otherwise it's quite general guidance on environmental integrity, on additionality, safeguards, that sort of thing. And these can be interpreted quite differently by countries. So there will be a bit more work on this confidentiality issue as well as on inconsistencies for next COP. But the risk here is that the text agreed already sets a poor precedent that it might not be possible to go back on. And I think if I can quickly speak to Article 6.4, I'll be brief. I think I would speak to the same question that you asked, Lisa, about the mitigation contribution unit. And I think this is actually one aspect where the outcome could have positive potential in the sense that, in effect, this amounts to sort of a formal recognition from the UNFCCC of the contribution claim. I think this is something that many actors have been calling for many years, including ourselves. And I know Gold Standard as well has been calling for this in the form of an impact claim. And this is kind of an endorsement of this claim in a way. And so I think this sends a clear message to the voluntary market that carbon credits should not be double claimed, even if it's for voluntary uses, and that a traditional offsetting approach really isn't appropriate when there are better alternatives that exist, in the name of retiring credits without making offsetting or compensation claims, sort of as a way of channeling results-based climate finance and communicating along those lines. So that's sort of a more robust, accurate, and transparent way, and I would think is the way ahead. And I think some will say, right, that the text is not so prescriptive, Sharm el-Sheikh, on this, and that it's not a claims guidance per se. But that's not really so surprising because it's not possible for strict claims rules to come from the UNFCCC, since there wouldn't be authority for them to regulate those claims. And I'd say that the outcome here is actually sort of as prescriptive as a UNFCCC process can be regarding the claims side. So it's no accident that the text refers to these as mitigation contribution units, that they say it's eligible for results-based climate finance, and that they further specify that the point is to support emission reductions in the host party. So yeah, and there are further elements regarding the definition of removals and sort of methodological principles that the supervisory body will be addressing in the future. But anyway, I'll just leave it at that for now.
Yeah, great. Thank you. And Lisa, I know you have to leave before the end of the course, so we'll come back to you now to respond. I think you wanted to respond.
Yeah, there's some really tricky wording in there, and there's a point that I really want to make. They're not limited to use in the host country. If you look at the wording of Section 28 of the Article 6.2 decision, the term inter alia is used in relation to the uses. So they are, in fact, not limited to the domestic uses you see in the list. That's just illustrative of some of the uses they might be used for. Consistent with the meaning of the term inter alia. So we are quite concerned about double claiming and double counting, particularly given the lack of corresponding adjustments and the term inter alia. And that was a very hotly negotiated concession between the parties. So watch that space, and I expect there'll be need for further action from real integrity-based standards like the gold standard.
Okay, thank you, Lisa. Yeah, Jonathan, over to you, and then we'll go on to Florian.
No, just to say, I agree that the inter alia opens it up to further potential uses which are problematic, which I would disagree. Yeah, I would say that it's not a good thing. But I would say that this is where it comes to the buyers themselves to use a responsible claim regarding these credits. But anyway, I'll leave it there to not take too much time.
Great, thank you. Florian, coming to you now, and I think this is a good topic to segue onto you for, because Atmosphere has done a lot of thinking about this and about responsible use of credits in the voluntary carbon market. Now we're in the Article 6 context. And I know that you're also looking very closely at Article 6.4, how that develops, and sitting patiently through some of the supervisory body meetings as well. So I'd be really interested in your reflections from the COP, and as working for a project developer, how you see this and whether this provides the signal which you need across the board.
Yeah, thanks, Hugh, for this invitation and this interesting discussion. Yeah, first of all, as a general comment, I'm a very optimistic person. But the general outcome of this COP is quite disappointing. I think they're having no really clear signal that we raise ambition towards the 1.5 degree target, even leaving a phase out of oil and gas out of the text is really problematic. We would need more leadership, clear signals that we will go into a world without fossil fuels based on renewable energies. So this is a clear negative comment, but I would like to go to the positive sides of the coin. I was not so much involved in the negotiation itself, but rather using the COP to engage with our partner countries and to engage with stakeholders. And I see a clear movement towards getting better prepared for a Paris-aligned voluntary carbon market. More and more countries have come to work on a strategy how to use markets under the Paris Agreement, and these countries get prepared to see what kind of finance can they use in this whole spectrum of options: climate finance, carbon markets, own funds. So they are started to map the space of financing options under the Paris Agreement. Also, I spoke a lot with investors and other project developers, and there is a clear appetite, I think, from this private sector to move to a Paris-aligned market and to really use the new tools to steer investment towards projects that raise ambition and make us moving quicker towards the 1.5-degree target, closing the gap between the current NDC commitments in some and what we would need to reach the 1.5-degree target. And there is a willingness also to use the new tools, to use correspondingly adjusted units for offsetting, if you want to stick with the offsetting for a while still, or to move to contribution claims. There was WWF Germany presented a report, Fit for Paris, giving some guidance to companies how they might use the contribution claim. And I also think it's interesting to have this mitigation contribution wording in the Article 6.4 text, because now it gets clearer to companies that there is a difference between offsetting using ITMOs and contribution claims, moving funds voluntarily to very much needed projects, but these projects then, if they are not authorized as ISMOs, cannot be used for offsetting claims. So this differentiation, I think, is becoming more and more clear. And so in the end, I think it was implementation COP working on the voluntary carbon market reform, getting aligned with Paris. And there's a lot of work still to do, but in this sense, it was a step forward.
Great. Thank you very much, Florian. And then, Teresa, we're going to come to you now. And I mean, I think one of the reflections that I have from the discussion so far, and one thing that we've been thinking about in Gold Standard as well, is just from us in Gold Standard, we want to align with the Paris Agreement, but we don't see that as the ceiling. We probably see that as the floor. And we talked here about some of the areas where the text may not be as perfect as it needs to be to provide integrity and to kind of have the right trust. And you're working on development of the ICBCM's core carbon principles within IETA. And so looking at what that floor is in the voluntary carbon market and how things work there. So it'd be really interesting to hear your reflections on what came out of Article 6, what this means for the ICBCM, but then also more generally, what came out of the COP for you in IETA and also for the ICBCM.
Sure, happy to, and great to be here with everybody. What came out of the COP in general? I mean, I do think that we have more clarity in some areas, right? They're just incredibly technical decisions as opposed to the more policy-driven decisions we saw in Glasgow. But we know much more about what registries are going to look like. We know much more about what CDM transition is going to look like. We now know what a mitigation contribution is going to look like, right? As in, like, we finally have a name, and if that's the only thing we've achieved, we finally have a name for a non-authorized unit, right? And then there are obviously the areas that we don't know about, right? So we still don't have all the guidance and corresponding adjustments, right? We still don't know what methodologies are going to look like under 6.4. We still don't have all the guidance on how avoidance is going to be treated, right? And I think that all of these factors will impact the voluntary carbon market, and I think thereby they will impact the work of the Integrity Council. I think in the voluntary market overall, right, and like it's coming out in the chat, and I see Lisa is super active and sort of clarifying, right, as in like there's no limitation on use of these credits, right? Inter alia means that they can be used in the voluntary carbon market. They will be issued under 6.4, but they're not going to apply a corresponding adjustment in that case, right? And I think what I'm hearing the most at the moment, and that's not for the Integrity Council, but I think that's more for the IETA membership, is questions around claims, right? So like, what does that mean for a buyer in the voluntary carbon market if they're buying a unit that either has or doesn't have a corresponding adjustment, right? Is that going to change the way the claim works? Does it mean it becomes a contribution claim rather than an offset? And who regulates that? Right, and I think we're going to get more and more guidance on claims, right? That's not for the Integrity Council. That's much more for the VCMI, right? So it's the Voluntary Carbon Markets Integrity Initiative. I also think we're going to start hearing more from the SBTI, right? But I think it's really relevant to continue highlighting that we don't have binding regulation on claims, right? In some countries we do, of course, but overall for the voluntary carbon market, we don't have binding regulation on claims. And I think that's where we're going to see a lot of the tension, but also a lot of the movement in the next year, right? And I'm personally super excited to work more closely with the VCMI, both as IETA and as the ICVCM, and really see how that plays out, especially as we sort of figure out what this means. What is the impact of corresponding adjustments on the voluntary carbon market? I think your other question was sort of more around like, what does this mean for the ICVCM, right? And I'm sure that many of you, if not all of you on the call, saw the public consultation that went out earlier in the summer, right? And there were 3 elements that we had up for public consultation on Paris alignment, right? One was share of proceeds, the other one was OMGE, so overall mitigation of global emissions, and the third one was corresponding adjustments. And the question there for the Integrity Council was really, if the Integrity Council is trying to issue a framework and a label, right, a core carbon principles label for what does a good credit look like, should that include share of proceeds, OMGE, and corresponding adjustments? I can't tell you the outcome, right? As in like the board has not shared their decision publicly on all these issues, but I think we can share a little bit, right? As in like, I think we're, and maybe speaking more as IETA than the Integrity Council, right? But like, it's difficult to require a minimum quality threshold on something that we can't currently implement, right? So like, as long as we don't have complete market infrastructure for corresponding adjustments, it's very difficult to require that for the time being, right? And that would be the IETA position towards the ICVCM. But certainly over time, that's going to evolve, right? And I think the way that the ICVCM is going to operate is that there's going to be continuous improvement cycles. So as we learn more about guidance on corresponding adjustments, and as we see how the market is responding and buyers are responding to corresponding adjustments, I do think that there will be evolutions in the guidance that comes out of the ICVCM. And I think most importantly, maybe on the Paris topic, we are trying to align that work with the VCMI, right? So we're jointly going to start looking at the impact of Paris alignment on the voluntary carbon market, and then how that should influence both the guidance coming out of the ICVCM on sort of the supply side of credits, and the guidance coming out of the VCMI on the buy side, the claims part.
Very interesting, thank you. Okay, so we're going to turn now to questions which we've got in the chat. I know Lisa has to drop off in a couple of minutes' time, so Lisa, whenever you need to go, please feel free to. And thank you very much for this, and thanks for being our question administrator in the chat as well. It's been very helpful. I mean, a lot of the questions that we've had in the chat are around mitigation contribution units and their uses, and we've addressed. We talked about that quite a lot. So there's some other questions that I wanted to get to first, and then maybe we'll come back to this afterwards. One question, Florian, that I want to address to you is around demand for units from former CDM projects. So there's an ability to transition CDM projects through to the Article 6.4 mechanism. And there's a question in the chat about whether there will be demand for units from these projects. And I'm just interested in your views and what you're hearing from buyers on this.
Yes, I think the first 6.4 units we will see in the market are probably from former CDM projects, because these are the projects that have the ability to move to the 6.4 crediting scheme, and these are the ones that first will issue 6.4 units. And there's definitely a demand for 6.4 correspondingly adjusted units we see in the market. The buyers that were looking for credits with international oversight plus SDG monitoring, they were choosing CDM plus gold standard labeling. That was the best you could get under the Kyoto market, and this will move to a 6.4 demand for sure. And yeah, there is demand. There are many. There were some calls. For example, the German government opened a call to buy units that have a trend that they can be issued as 6.4 units. So and other corporates are also looking into that as a substitute for gold standard labeled CRs.
Great, thank you, Florian. And Jonathan, I'm going to come to you on a subject which we haven't talked about so far. So there's a question here from Shigeo about language around human rights and consultations with native populations and indigenous communities. And so I think there's a lot of focus which has gone on a few areas of the text and a few things decided, but it'd be great to hear from you on these issues. And also, I think Carbon Market Watch was doing some work around the grievance mechanism discussions as well.
Yeah, so regarding that, actually, at one point with the removals recommendation, the supervisory body that was sent back for more work at CMA, at one point there was language that they should also take into consideration human rights and the rights of indigenous peoples in their formulation around removals, for instance. But that, unfortunately, was dropped in the end. So that was kind of a bit of walking back some of what was in previous texts and also from Glasgow. But I think here, yeah, what you mentioned about the grievance mechanism is really something that's crucial, that there needs to be sort of a robust and clear grievance mechanism in place in 6.4 before any projects are registered or credits are issued, because it's a fundamental right to have a right to redress in case local communities or others might be negatively impacted. This is really important to ensure that this happens. So there needs to be work on this. This should also be a priority issue. I know that there's many people want 6.4 to get up and running, but really there needs to be a good, clear grievance mechanism in place, as well as strong safeguards, because otherwise there could be problems. It could lead to human rights violations, and that will, of course, that's obviously terrible for those reasons, but it would also not inspire confidence in the 6.4 mechanism, rightfully so. So this is definitely should be a matter of priority and urgency, also for the supervisory body, in addition to its other work.
Yeah, great, thank you. And I mean, for gold standard, it's something that we've always taken seriously as a standard ourselves. And just from our experience as well, you know that this is an area where if things go wrong, then it has a huge significant impact, not only in the direct impact it has, but also for the reputation of the standard and for the market in general. So it's an important issue which didn't get that much discussion at this COP, I don't think, but really does matter to implementation. I'm going to come back in a second to some of the questions in the chat, because there's some really good ones in there. But I wanted to take a step away and see if there are any reactions to some of the stuff which happened outside of the COP itself. So a few of the things which I mentioned were the IOSCO consultation. And Teresa, maybe it'd be great just to hear not so much in the detail, but in general about the interaction between ICPCM and regulation which may come in the market in the future. And then any reactions as well on the Energy Transition Accelerator launched by John Kerry, the African Carbon Markets Initiative, some of these other initiatives looking to drive finance into the market. But Teresa, maybe back to you first.
Sure. Yeah, I was very much going to mention the ones that you've also just brought up, right? So like huge news on the ETA, also on the African Carbon Markets Initiative. But maybe to deep dive on the IOSCO piece a little bit. So they've put up public consultation on two elements, right? Is like what is the role of financial regulators for compliance carbon markets? And the second one, which is maybe a little bit more relevant to this crowd, is like, what is the role of financial regulators for voluntary carbon markets? We haven't dived into it too much yet, but I think overall, for the ICVCM, this is a really welcome development. We issued a statement way back when it came out, well, way back 2 weeks ago when it came out, which now feels like ages ago. But effectively, if you want to look at how IOSCO has framed their sort of I think outlook and scope is very complementary with like how the ICVCM thinks about the market, right? So effectively what you have is a credit, and that's what the ICVCM concerns itself with, is like the quality of the actual credit, the underlying asset. You have the use question, right? And that's what's popping in the chat all the time at the moment, is like, who gets to use it? What do they claim? And so on, which is what the VCMI is concerning themselves with. And then there's the middle bit, right, of the trade, right? And I think that that's where we're actually lacking a little bit at the moment. I think it would be wonderful to see IOSCO and the regulators that are members of IOSCO to get more involved in regulating the actual trade of carbon credits, right? There's many open questions, I think, around sort of like the legal status of credits in different countries, right? As in like, are they treated as commodities? What are the underlying contracts? There's also, I think, many risks that came up in our consultation that are maybe outside of our scope, right? But that refer more to the risk profile within trading and reselling of credits, right? Which isn't within the scope of the ICVCM to certainly not regulate, but even opine on, right? But I think that these are all great things that could come out of an IOSCO consultation, and then hopefully over time get picked up by the financial regulators within that. And you were asking about other things that happened outside of the negotiations, right? I think some of the big ones for the voluntary market certainly was Eickhold coming out, right, with their net zero guidance for non-state actors, as well as ISO issuing their guidance on net zero. So I think all of these pieces are starting to paint a clearer picture. I think while it is confusing and there's many different pieces coming out, I think they're all sort of driving in the same direction, right? As in like, you can offset your residual emissions if you use a removal credit. And in some cases, I mean, ISO also encourages corporates to go beyond that, right? And look at, as long as they're meeting the interim targets and they're in transition to net zero, to also offset emissions beyond their residual emissions.
Yeah, right. And yeah, I think this is one of the challenges that we hear a lot, is the volume of guidance which comes out from different places. But I think you're right, in general these things go in the same direction. And gold standards came out as well to welcome the IOSCO consultation. I think there's some questions which it's asking where the work of a regulator you can see being helpful to the scaling of a market in a robust way. Some of the things which you talked about there about definition, understanding legally of what a carbon credit is and how it's classified. I think things like that can be important. Florian, Jonathan, any reactions to other things which happen outside of the Article 6 negotiations at COP? Anything that was meaningful to you for your organization or the market?
Yeah, maybe a short comment, if you mind, Jonathan. I go first. I think what I would like to reflect a bit on more on the bottom-up approaches, the bottom-up regulation from the implementing countries, for example. More and more countries hosting projects are starting to develop carbon market regulations to see how they deal with requests for authorizations, how do they process these, what kind of projects would they like, and under which conditions should they be implemented. There is, it is currently very difficult for project developers to navigate through this jungle of bottom-up and top-down regulatory approaches. Probably here are many project developers in this call, and I just wanted also to mention on their behalf the difficulties project developers are facing. We had many discussions with project developers, seeing a bit the disconnect between the international regulatory process and the project reality and the reality of the market that is investing today in projects that should produce products and services under these markets. So we have to be aware, I think, that we are operating with regulation here in a market that is ongoing with channeling finance towards decarbonization, and we should be aware that we try to support these developments as best as we can while keeping integrity high.
Great, thank you. Jonathan, anything from you before I come to a final question?
Yeah, I could speak quickly to the energy transition accelerator. I think it's hard to have a firm view on this because there's still a lot of questions on several points. And it seems like there's kind of still in a testing phase of ideas and that there'll be further engagement. But I think, some aspects that could be more positive is including a 5% share of proceeds for adaptation. It seems like would be part of this, excluding fossil fuel producers as well from the initiative from being able to purchase credits, from what I understood. But there's still also, I think, a lot of questions that are unclear. So regarding who would be certifying sort of these credits, because, for instance, if it's tied to renewable energy projects, right? I know that Gold Standard and also Vera don't register new projects unless it's in specific circumstances due to concerns around additionality. So there's still also some unanswered questions about how these units would be used, if there would be corresponding adjustments attached. While there is a mention of share of proceeds for adaptation, doesn't seem like there's a reference to OMGE, which we would think should be in there. So there's still quite a few questions, I think, and some uncertainties there. Yeah.
Yeah, great. So there's been, what's been very helpful during this conversation is that there's a lot of dialogue going on between participants. So there's a lot of questions we haven't been able to answer, but they've been answered as we go through, which is really good. And I think on the Gold Standard side, we'll produce something over the next few days which tries to unpack some of these issues a little bit more. I guess I just wanted to come back to everyone for one last minute with a final wrap-up question, just to understand what you see as the most important things that could happen to provide some of the clarity which we need over the next 6 months. So what can provide the clarity either within the Article 6 discussions on the issues which matter or outside? We've talked about the role of the ICBCM and other elements as well and about claims, but I'm interested in what matters most over the next 6 months. What do we really want to see coming out of this COP? So who wants to go first? Florian, pick on you first.
Well, this is a very difficult question, but it's good. It's a good question to prioritize. And for me, my job is to support the project managers and the management of atmosphere to move towards a Paris-aligned business model and keep that working and support in the end the people that benefit from the projects as well. And for me, the highest priority is to engage actively with the partner countries implementing the projects. And I think the clear guidance about the use cases for different types of units is very important. We have a clear view on that. We communicate that very clear with atmosphere customers. You can read it on our website. But for the general market, it must be a very broad recognition of a consensus of how to use what type of credits.
Great. Teresa.
Yeah, I'm gonna piggyback on Florian. You gave us a 6-month timeline, right? I kind of want to say the most important thing is to really provide clarity to the market where we require corresponding adjustments, but that work program won't finish in 6 months, right? So I think the best thing we can do is what Atmosphere is already doing, is to clarify the stance, I think, of larger voluntary carbon markets initiatives, right? As in, like, the ICVCM needs to come out with their stance on corresponding adjustments. So does the VCMI, right? We need to provide some clarity to, and so does IETA, by the way. Like, we need to provide some clarity to buyers. I think, you know, like, where are the differences for the authorized and non-authorized units? How is that going to affect claims? And then where do we think the gavel should fall? Now, right, as in, like, for the 2023 sort of interim period, until we have all the detailed guidance that's going to come out of the international process.
Great. Jonathan, I think you've been left with about 30 seconds to provide the perfect answer.
Yeah, so I think having clear guidance also on corresponding adjustments from these initiatives that there should apply to any credit that's used for an offsetting purpose would be important. I mean, we would prefer that there's a shift away from offsetting entirely, but in any event, I can't go into that now. And then I think also when it comes to the supervisory body, this body is going to be having many meetings in the under Article 6.4 supervisory body is going to have many meetings in the coming months, which are open to the public to view, to also give inputs. And I think it's important to have wide engagement of stakeholders, specifically when it comes to designing things like the grievance mechanism. Having actual inputs in the design from local communities and indigenous peoples is something that's extremely important. So I think also getting the word out that the supervisory body there should be inputs into this process. So yeah.
Yeah, and I think, I mean, that kind of sums up really well. I think actually what you can take from the COP on Article 6 and where we are is that there are some extremely important high-level political decisions, and maybe not political necessarily, but important decisions which we all need to have answered. Around claims is one of the most important ones, and I think claims was the thing which came out in what all of you have just said there. And it's been an issue for a while in the market, and I think it still remains one now. But then at the same time, if you look at the Article 6 text, there was a lot in there on implementation, a lot of detail about how these things can be implemented. And it is important that that goes forward, but also it goes forward in the right way. So the work of the supervisory body is really important over the next 6 months, just to make sure that all of the pieces are in place, but also that they're in place in the right way, while we need to manage and clarify some of these kind of higher level issues. So some progress in some areas, some disappointments in some areas, more work to do. I think that's what I take from this. But thank you very much to Lisa DeMarco, who's left earlier, to Florian Eickhold, to Teresa Hartmann, and to Jonathan Crook for some really great insights. And thanks to everyone in the chat for all of your great questions, and to those of you who answered questions as well. We will provide some more information as gold standard to try to unpack some of the decisions over the next few days. And you now have kind of all of the panelists here if you want to follow up with anything on LinkedIn or elsewhere. And I hope everyone has a lovely rest of your day. Thank you very much.
Thanks, everybody. Take care.
Thanks.